Good evening, my fellow small business owners. This is Deepak. I'm your tax code advisor. And in today's segment, I want to talk about why you don't want to set up an S-Corp. You might be thinking, Deepak, you're always talking about setting up an S-Corp, that it saves on taxes. True, but sometimes that's not a good idea. Sometimes that can be a costly mistake. Just like anything else in taxes, sometimes it makes sense, sometimes it doesn't make sense. So I wanted to talk about this because we have few new members in the group, and those new members are I noticed some of you guys have an LLC, some of you guys have an S corp already. So I wanted to kind of point out some of the things that you need to pay attention to. So when should your business be taxed as an S corp? That's the question for today. So we'll talk about that. So specifically, we will explore when does it financially make sense for your business to be an S corp. Okay. So let's start by laying the foundation. We always talk about why you should set up an S corp, but nobody really talks about why you should not set up an S corp. And we need to always look at the both sides of the picture, because only then we can assess if that particular election makes sense for us or not. So let's dig deeper. Now, there are multiple reasons why you might not want to set up an S corporation, but one of those reasons, which we will dig deeper today, is when your business is not making enough profit, when it's not making enough money. Now, there are other reasons, such as, your state might be causing problem. Maybe you have a really high W-2 income. Maybe a lot of your income is coming from passive activities instead of active activities. So there are other reasons as well, and we're gonna talk about those if we have enough time. But I specifically want to address this money issue, and the reason why that's important is because it's very important for new business owners to understand that, because more than likely, if you're a new business owner, you just got started, then probably you're not making money. And I get sick and tired of people setting up random entities when they do not even have an income. Why? Because majority of them are not successful. Don't worry, they're not part of our small business advisory group. So it's none of you guys, it's other people out there. And they start a business and then they fail. And then end of the year or next year, they're back and like, hey, now we want to shut down the company. So they paid an expense to set up a company, and then they pay an expense again to shut down the company. Then they pay an expense to operate the company, file their taxes, stay in compliance, file all kind of report. A whole bunch of extra headache. Why? You could have easily avoided all that. If you're not sure if your business is going to make money, why are you setting up entity? Why are you wasting money on that? I would not advise anyone to waste money on setting up an entity unless you know you're going to make some money or you have some sort of liability that we need to pay attention to. So those are the two key reasons why you want to. And even for liability protection, maybe we don't do S corporation. Maybe we just simply do LLC and we leave it at that. And if you make money, then we convert to S corp. So you might say, well, Deepak, okay, but why? Why not? Why not do it from day one? So I already gave you one reason. See, what happens is, if you have an LLC and we treat that LLC as a sole prop, that the income that you earn in the LLC simply flows down to Schedule C on your 1040. No extra tax return. We do Schedule C, we do your 1040, we're done. If you have a real estate, same thing. You have an LLC, the income flows to your Schedule E, we do your 1040, we're done. But once you treat your company as an S corp, now it requires corporate compliance, and there are a lot of requirements for that. You need to do your 120S. You need to have all kind of other requirements that you need to comply with. And again, today we're not going to go into all those requirements, but I just wanted to point out that you don't want to take on extra work if you don't have to. That's the point I'm trying to make. Okay, so let's talk about that. So if your business is currently, let's just say, taxed as a sole prop or a single member LLC, that means your LLC is taxed as sole prop. So let's give it an example so we can kind of see it. How would it work out? So you had $60,000 in revenue and $20,000 in expenses, leaving you with about $40,000 in net profit. Now, some of you might be thinking, well, $20,000 in expenses on a small business, isn't that kind of high? Not really. If your tax professional is really good, And when I say really good, I mean they're talking to you, they're spending time with you, they're asking the right questions, they're trying to discover what kind of expenses out there, then they should be able to find it. But it doesn't happen in the world. So what happens is most tax firms, the way they operate is you go meet with a tax person, and then many of them outsource your work overseas and into a different country. And what do those people do? They send you an email. Hey, send me all your expenses. And you send them what you think you need to send them. And that's how they prepare your tax return and you're done. That's the problem with working with overseas. And another problem, obviously, is if they're sending it overseas, then now you have a whole bunch of data security issues, right? Can anybody guarantee what happens with your data? I mean, that's your financial. In my opinion, people shouldn't be doing it. But again, people do it all the time. I see it all the time. All I can tell people is just be cautious. Please don't send your personal information overseas. That's your social security number, driving license number, your finances, your numbers. You know, who knows where it will end up. But anyhow, what I'm trying to say is if you are working with a good tax firm, they're going to take time to get to know you, get to know your business, explain to you what are the things that you should be paying attention to, and trying to figure out where your expenses should be. And based on that, coming up with $20, even $30,000 is fairly reasonable. So don't worry about that. So let's stick with an example. So you had a $60,000 in revenue and $20,000 in expenses. That leaves you with $40,000 in net profit. As a small business owner, with $40,000 in net profit, you will face two types of taxes. One is self-employment tax, and the other one is federal income tax. Now, self-employment tax, we know, is 15.3%, which is going to be roughly about $6,000 in this case. But your federal income tax will depend upon your tax bracket, so whatever that might be. So could in any range, right? We have all the way people paying even 50% taxes, and then some people are paying almost nothing. So it's going to be some rate. So let's take a look at what happens when you become an S-Corp. How does the dynamics change? And I'm picking very simple numbers. Some of you guys are making $200, $300, $500,000. So with an S-Corp, you still have $40,000 in net profit. So profit doesn't change. So by having an S-Corp, it's not changing your net profit. That's not the idea. However, what does change is that we get to divide your profit into two buckets. So remember when I said if you're an LLC being treated as a sole prop or you're a sole prop, then entire income is being treated in one bucket. But now that you're a business owner and we have picked it as an S Corp, I get to divide it into two buckets. Bucket number one is my profit, and bucket number two is my income, W-2 income, like a paycheck. So what happens is with an S Corp, the IRS requires you to pay yourself a reasonable salary. You cannot just say, I'm only going to take profit. And I say that because I see that. Because a lot of times people walk in with an audit, they're like, oh, I should watch this video. And they said, with S-Corp, you just take profit, don't take a salary. And if you don't take a salary, yes, your tax return can get audited because that's not what IRS wants you to do. Somebody got to run that business. Somebody got to take that salary. So, you got to take salary. So if you're not taking a salary, that doesn't work. But you get to decide what that salary is as long as it's reasonable. Now, this is where you will get different opinions. Some people might say, salary should be 100,000. Some might say 80,000. Some might say 50,000. So right amount, I will leave it up to you, but I can give you my recommendations. So my recommendation is it needs to be reasonable enough that it looks at least good on paper. So if you have, let's just say your income is less than $100,000 net profit, then maybe around 35, 40,000 would be a good, reasonable salary. Now, some other accountant, some other CPA might disagree with me and might say, I think 80,000 is a reasonable salary, but that's his opinion. My opinion is that we never had a case where IRS came back and said, look, we don't agree with it. So, if it ever happens, we need to be able to explain to them why we feel it's reasonable. So once again, I strongly recommend that when you set up that consultation appointment for setting up your business, we talk a little bit in more details and figure out what that reasonable salary looks like. Okay. So So the IRS requires you to pay yourself a reasonable salary, typically around, let's just say, because it's small business, it could be maybe 50% of your profit. If it's large, maybe even less. So, if you have a $40,000 profit, you take maybe $20,000 as a salary, subject to your self-employment tax. So that means now that tax is about $3,000. So remember, before it was $6,000, but this time it's $3,000. And the remaining 20,000 is considered distribution from your S-Corp, and you don't pay any self-employment tax on it. So in this scenario, you save $3,000 right off the bat. But let's just say you were making $200,000 net profit. Maybe this time I still take $50,000 salary, and I take $150,000 in net in distribution at the profit share. So you see, the savings could be huge, right? But there are costs associated with having an S-Corp, right? You will still need to form an LLC or a corporation, make an S election for your taxation purpose. You have to file annual report with your state. You have to hire a tax person to do your taxes. You have to do payroll processing. So there might be some cost. Maybe you're paying maybe $1,500, $2,000 a year in managing that S-Corp. So does it make sense? You have to kind of see. Sometime it does, sometime it doesn't. If the income is high enough, let's just say if you're making more than $100,000 in your business, I think you cannot go wrong with S-Corp. If you're making with less than 100,000, then let's sit down and talk about it a little bit. Does the number make sense or not? Or can we be creative with that strategy? So when you add up all the cost, like I said, anywhere between $1,500 to $2,000, it becomes break even. For those of you guys who are making maybe $70,000, $80,000 in net income. This means if you're paying $6,000 in self-employment tax before, and now you save $3,000, but let's say you have a $2,000 cost, you're still making $1,000 in net profit. So it still works. And obviously, the more income you have, the better it is. But here's the thing. We're only just getting started with tax savings. This is just one strategy. Then we build upon it. We add additional strategies to reduce your taxable income. So this is not the end of the world. So in summary, you could consider becoming an S-Corp when it results in tax savings above the cost, about what it will cost you to operate and maintain that S corporation. So as your profit increases, the tax savings from this tax strategy becomes even bigger, right? So I hope that clarified this question. As usual, whenever you're thinking about setting up a company or you're thinking about closing down a company, my simple recommendation is always reach out for consultation. Let's talk about your situation. Let's see if those things that we talk about are even relevant in your case. If you're a 1099 contractor, you are a small business owner, we can perhaps consider converting you into an S-Corp. If you are an LLC, maybe we should convert you into an S-Corp. Sometimes we convert from S-Corp to an LLC or a sole prop, depending upon what's going on. Sometimes people have real estate that we need to be careful how they should be structured. And sometimes you will hear somebody tell you that, oh, why do S-Corp? Why not do C-Corp? C-Corps have cheap tax, 21% flat tax, you're done. They're lying to you. That's not how it works. Run away when people give you advice like that. I'm not going to get into C-Corps today, but I just wanted to point out that there's all kind of misinformation out of the internet, how people are, giving advice, how people are not considering legal and tax liability into when they give advice. So please stay away from all that kind of junk and talk to professionals who are licensed, who are properly insured, who have been doing this for a long time, who have done thousands of these, and they can give you proper guidance. That's my recommendation. Lastly, I would say we have a few events coming up. So those of you guys don't know, we have a live event coming up in Milpitas, California. So that's happening on February 24th. 2024. I know this video will stay there for a long time, but you guys can always go to taxcodeadvisors.com to see what's happening, or follow me on WhatsApp, and I'll put that link below the video, so that way you know all the updates that's coming from our company. We have a live event coming up in Houston, Dallas, Texas. We have a live webinars coming up. So plenty of options. We have a financial call coming up. Those of you guys who are interested in learning finances. So one of the calls we do every 2 weeks is where we talk about what is data telling us about our finances. So we focus on data a lot. Everything, even in our small business advisory, I always focus on data because see, data doesn't have emotion. It tells you the real picture. So that's what I focus on. If you want to get a lot of data, then please join that call. I think you'll get a lot of value out of it. Similarly, we have a real estate call coming up where we take a look at the real estate data. So those are two ones that's happening continuously all the time. Really good stuff. If you want to talk to anyone, if I can't help you, maybe you're looking for a realtor or mortgage or insurance or some other professional that I can possibly connect you with, I'll be happy to do that. If you have a business and you're looking for customers, clients, partners, and you think I can make some introductions, please reach out to me. And by the way, starting this month, I'm starting a new session where I'll be interviewing small business owners and learning from them how did they grow their business and how can other people get into that business. So if you're a small business, you want to be part of that series, definitely reach out to me. See, look, I'm available. I'm there to talk to small business owners. Why? Because I have a very clear goal. I want to talk to 3 new small business owners every single day. That's what I do. That's my North Star metric. And I preach that. I teach that. So I hope you would like it too. So I'm looking forward to talking to you guys soon, very, very soon. Till then, thank you so much for watching this video, and I'll look forward to meeting you in person very, very soon. Thank you.